Welcome to the Revenue Accounting Matters Step-by-Step Training course. Module 5, Recognize Revenue, is the 5th course in a series of 6. Click Next to begin. By the end of this course, you will be able to evaluate the criteria for recognizing revenue over time, determine whether control is transferred over time or at a point in time, and identify an appropriate measure of progress for performance obligations satisfied over time. We are now on Step 5 of the comprehensive 5-step framework. This course will focus on Step 5, Recognize Revenue when or as performance obligations are satisfied. In Step 5, an entity determines whether it should recognize revenue for each performance obligation over time or at a point in time. Revenue is recognized based on when a vendor transfers control of the promised good or service underlying that performance obligation to the customer. It can be challenging to determine whether control is transferred over time. So let's review some examples that demonstrate how an entity would evaluate the relevant criteria. Let's work through some examples where we will apply the revenue guidance to assess whether revenue should be recognized over time. Click on Heavy Lifting Inc. and Wings Inc. to review the facts and work through each example. Review the facts about Wings Inc. When done, answer the question using the facts you've learned.
The question is, Wings should recognize revenue in which following manner? The correct answer is B, over time, due to the customer having control of the asset over the process. Take a few seconds to pause the video and review the fact pattern for heavy lifting. A similar question for heavy lifting. How should they recognize revenue? The correct answer is C, over time. This is because the benefit is being received over every mile that is being driven. If heavy lifting stopped transporting, another company could pick up and continue the delivery.
Space Tech Inc. enters a contract with a customer, a government agency, to build a satellite. Space Tech builds satellites for various customers, such as governments and commercial entities. When evaluating Space Tech's contract with the customer, some additional facts are important to the determination of whether to recognize revenue over time or at a point in time. Review each fact pattern and determine the correct answer based on the facts.
The first question is, does Space Tech's performance create an asset with no alternative use? The correct answer is yes. The satellite is a specific asset for this customer. The next question is, does Space Tech have an enforceable right for payment? The correct answer is no. Please read the full text for additional detail. The final question for this fact pattern is, should Space Tech recognize revenue at a point in time or over time? The correct answer is A, point in time, due to the lack of an enforceable right of payment. Please take a minute to read through fact pattern B and the slight changes that were made. Pay attention to the payment enforceability. Additionally, the contract does not meet the criteria to be recognized over time. Under this new fact pattern, the first question is, does Space Tech performance create an asset with no alternative use to the entity? The correct answer in this fact pattern is no, it has an alternative use. The next question is there an enforceable right for payment? The correct answer in this scenario is yes, there is an enforceable right. This is mainly due to the termination penalties. The final question for this fact pattern is, should they recognize revenue at a point in time or over time? The correct answer is point in time because they have not met both components of the criterion within 606 to recognize revenue over time. Please take a moment to read through fact pattern C, which has elements of both fact pattern A and B. Does Space Tech's performance create an asset with no alternative use? The correct answer is yes, due to the significant cost to change it for another customer. Does the company have an enforceable right for payment? The correct answer is yes, based on the termination clauses. Based on the answer to the other two questions, should they recognize revenue at a point in time or over time? The correct answer is over time because it meets both criteria.
For performance obligations for which revenue is recognized over time, a single method of measuring the progress toward complete satisfaction of that performance obligation must be selected. The method selected should reasonably depict an entity's performance in transferring control of goods or services to a customer. Selecting a single appropriate measure of progress can be challenging and requires judgment, particularly when a performance obligation contains multiple goods or services. Click on Cloud Cover Inc. to review the facts and work through the example. Review the facts about Cloud Cover Inc.
The question for this fact pattern is, what would be an appropriate approach to measure progress toward completing satisfaction of the performance obligation? The correct answer is A, because the company's promise is to provide hosting services.
Let's review some key points that we learned in applying Step 5. First, there are various reasons a performance obligation may be satisfied over time. It's important to carefully consider all facts and circumstances in light of the guidance to determine if revenue should be recognized over time or at a point in time. Also, the standard provides general guidance on applying a measure of progress for performance obligations satisfied over time. However, selecting a single appropriate measure usually requires judgment and may require significant judgment. Now that you have worked through some scenarios on recognizing revenue under Step 5, you should be able to evaluate the criteria for recognizing revenue over time, determine whether control is transferred over time or at a point in time, and identify an appropriate measure of progress for performance obligations satisfied over time.
So let's wrap up there. Comment with any additional questions you may have, and we can expand and help. Please subscribe so you don't miss any new content. Alright folks, thanks so much for watching. Please like, share, comment, and subscribe. And if you can, donate at Patreon. Anything you can give helps to keep the lights on and ensures we can continue to create content. And of course, helps feed FIFO. If you want to contact us about anything you saw in this video, accounting advice, or ideas for future videos, contact us at patreon.com/accountingacademy.
This video is designed to be illustrative and does not represent an official position. We make no representations, warranties, or guarantees and assume no responsibility for the application of this material. Please seek advice from a competent professional if expert assistance is required.